What's going on, everyone? In this video, we're going to be talking about the NQ futures, how you can start trading them. We're going to go over some levels. I'm going to drop you guys a little bit of a strategy here so you guys can implement this, whether you're trading a personal account, trading futures, or you're trading for a prop firm, or you're able to trade some futures. So the NQ is obviously the mini contract of the NASDAQ 100 index. If you're trading the SPY, the S&P 500, your contract would be ES, okay? In this video, we're going to be talking about the NQ. I trade the NQ personally just because it moves a lot faster than the SPY, right? Which is ES. If you're someone who can't handle that rush, you know, the stock moving or the index or the futures contract moving 10, 20, 15 points, you know, in a matter of minutes, then maybe play the ES contracts where it's going to move 1, 2, 3 points, right? Now, the NQ is definitely going to move a lot more than the ES. It's going to move $25 a tick versus the $12.50 a tick on the ES. If you trade the micro contracts on the NASDAQ, it's going to move $2. So I would definitely recommend, if you are a new trader, to please start off by trading the micros, okay? It moves $2, whether you need to trade 2 or 3 contracts so you can make a good clip on it. I would definitely build your confidence, build your strategy, build your system off of trading the MNQ after you build a little bit of a cushion in your personal account, or you take your payout in a prop firm account. You know, once you start to get the hang and the feel of it, then maybe move into one NQ contract. Again, trading, especially day trading and scalping, is all about risk management. You do not want to over leverage yourself. You do not want to put yourself under any more emotional stress that already comes along with day trading, okay? This is a very lonely game, and it's a very stressful game. So if you already have problems outside of trading, being, you know, depressed and lonely and anxious, and you're not too patient, this is going to completely destroy your mindset. So the first things first, before we actually even dive into the charts, is kind of do an assessment on yourself. You know, get your finances in order prior to trading futures. Get your, you know, your work in personal life balance kind of meshed out evenly. Please make sure you're eating a proper diet. Again, I know I'm talking about trading, but if you do not put the right kind of foods into your body to kind of fuel yourself, get proper and adequate rest and exercise, you are doing yourselves no favors. Okay, with that full disclaimer and that rant out of the way, let's go ahead and dive into the charts here. We're going to be looking at today's price action. Now, futures are going to be open 23 hours out of the day. They're only going to close for 1 hour to kind of roll over those contracts. So we can see that the day has already started here. Now, for myself, I never am really going to trade the quote unquote after hour session or the London session or the pre-market session. I trade New York, okay? So I trade New York session. That's going to be 6:30 a.m. Pacific Standard Time. I'm located in California. I get the pleasure of having to wake up at 5:30, 6 o'clock, you know, doing my charting in the morning. I don't get the pleasure of waking up at 9 like some of you guys, but my day also ends a lot sooner than yours. So by the time lunchtime's rolling around, I'm normally already out of here grabbing some lunch. I don't have to kind of sit at the charts and stare at them till 4 or 5 p.m. So, you know, there's pros and cons to everything. If we're looking at this chart right now as we stand today, right, meaning today's New York session, we came down and kind of tested that 20-day moving average, and then we got a little bit of a bounce off of it. Realistically, we could see going into London session, which is 2 a.m. and into the pre-market session, we could see a little bit of a dead cat bounce here. We do have, and keep in mind, we've got FOMC going on tomorrow. The market is going to be crazy. We've got a lot of numbers coming out this weekend, or excuse me, this week. So the market's going to be very volatile. We could be looking at, in fact, a short-term kind of rest, a short-term kind of pullback, right? The bears can finally be getting a little piece of what they've been waiting for, and that's a little bit of a pullback. All of 2023, the market has been in the bull, you know, kind of control. And if you have, you know, if you're a perma bull, you should have been making money, you know, the last 3, 4, 5 months, right? And if you're a perma bear, maybe you're going to get your opportunity right now. Maybe we get a few weeks worth of a pullback where we can try to capitalize on it. If you're just a realist and you're not a perma bull or a perma bear, you're just like myself, you're just a day trader trying to take a little bit of scraps off of that bone so we can eat, feed our families, keep the roofs over our head, keep the lights on, then it doesn't really matter if, you know, we're trending up or we're trending down. The only thing we really don't like is when we're just kind of going sideways, right? And, you know, we go through those periods of distribution where the market does kind of go sideways and it gets into like a trading range, right? And now we have to be shorting at supply. We can't be buying the breakouts. We've got to cover in the middle of the range, and then we've got to be rebuying at demand, not really, you know, looking for the breakdowns, because those breakdowns don't really happen. You know, you kind of get wicked out and then it reverses on you. So it's a little bit of a different kind of atmosphere when we're in a trading range. I don't personally like trading in ranges, just due to the fact that I understand myself and, you know, my genetic makeup, my emotional makeup. I tend to overtrade when we're stuck in a range, when we're going through a period of distribution, because, you know, the gains are smaller. I have to size down and I've got to take a lot more trades. It causes me to overtrade. I really like when we get big moves, obviously the big breakouts and the big washouts. Who doesn't, right? But again, we have to work with the market conditions that the market gives us. So if we're kind of looking at where we stand today, there's an easy short position that's coming up here on the NAS below 13,091. Okay, so the 13,090, the 90s is what we're looking for. And how we're looking to play this is we need it to crack 13,090. We need it to put in a new low, and then we need to kind of see it confirm on an hourly candle. So if we look at where the 13,090s is at, look at the first trade that we're going to get here. It's going to be below this 200-day moving average, below this Bollinger Band. And then I want you guys to notice how much airspace we have, right? So notice the difference here, how this is all empty, okay? And then how here it's so congested, right? It's just a complete cluster, you know what? So typically when we're trading supply and demand, we need to take trades that have the most amount of potential. Now, sometimes this means that we have to sit out. We can't trade every day. We need to wait for the levels to confirm. Now, you can see this aggressive washout here. Now, this was a perfect short setup that I was actually involved on today on the NASDAQ stock side of things, trading things like NVIDIA and Tesla and Meta today. Kind of pulled back a little bit, right? So what you're actually looking for here is, if you kind of go back to yesterday's price action, you can see the low here, you can see we double bottomed here, and then you can see today, once we really lost this area, we had open air space into the next area of demand. This is where you're going to want to be covering up. So again, I'm trying to teach you how to identify these supply and demand zones. Even if we were looking, okay, at a bear chart, let's say there's nothing on my chart here, we have a clear area here that is proven as demand. It's a double bottom, right? Some people are going to say, well, it's a double bottom, you know, if we lose a double bottom. Other people are going to say it's a level of support. Other people are going to say it's a level of demand. Other people are going to say, hey, you know what? Well, we lost a 50-day moving average, right? On a 1 hour time frame. To each his own, guys. Not either one is any different. What you need to do and be really good at is identifying these levels. So when you look at the chart, your eyes gravitate to these levels, okay? We have to see these blocks. If we look at this area that acted as a previous area of support, we can go a little bit further left and see that this area was acting as an area of resistance, which when we finally did break through it, we went on a nice little run, okay? So again, previous resistance is going to act as new support, and then when that new support is then broken through as aggressively as it is today, we can expect that it's going to act as some form of resistance again for a move down. So what I would ideally like to see is between now, pre-market, London session, and the open, I would like to see this continue to just drift higher and then start to stall, okay? Because we're going to have a clear ceiling here. So if we do get up to this area and then we get rejected and start to roll over, we can easily use this area as our stop loss, okay? And we can kind of go short to try to catch the move back down to today's lows, okay? And it's on the way down is when we want to be locking in profits. Now, a lot of newer traders will essentially watch it go up. They'll see the price action start to rise, and then they will say, okay, this is the bottom. It could be, but they'll say this is the bottom. They then get long. They're very, very happy that they're making money. And then next thing you know, we hit a ceiling and then we come down. And then they go from very excited to very sad. Okay, so what we need to kind of focus on is we do not want to be buying in a short-term downtrend. We do not want to be buying when it's going to be very, very choppy. What we want to do is buy the breakout and then the retest to show that we've actually got some support here. And then what we actually want to buy is the push off higher. This is where you're going to want to get long again, and that's going to be over the 13,283 area. So until then, we need to stay a little bit more patient, and we need to see what we actually do when we come up to this level. Do we confirm it, or do we start to get rejected? If we do get rejected, this is going to set up a beautiful short trade here where we're going to make a lot of money. And then we can obviously play the breakdown if we do break down below today's lows. And then we have a lot of room down to around 12,970. Those are the levels I'm going to be looking at the NQ futures going into the end of this week. Again, remember, things are going to be very, very volatile. FOMC, and we've got a lot of other data numbers coming out this week. Do not get trapped. Do not overtrade. If you manage to make a little bit of money in a week like this, please, please, please make sure you secure it. If you guys are interested in learning how to get funded with a prop firm that's going to allow you to trade over 6 figures so you guys don't have to risk your own capital and you can take those payouts, check the links down in the description box below. 2 amazing, amazing prop firms that I'm funded with, both of them. Also, if you guys want to get access to my big boy strategy here and how I use these levels of supply and demand, how I'm using them to identify stocks, identify futures levels, set pivots, save my ass from getting my accounts blown out, and make me money consistently to be a full-time trader, which is a luxury as well as a little bit of a, sometimes it's a little stressful, right? So, but again, I would rather do this full-time than be stuck working a 9 to 5, right? It's all about our mindset, and it's all about how well we manage our funds. And at the end of the day, how much money you're going to make really depends on how big your account size is, right? So if you're trading $1,000 account, you're really not going to make a full-time living, right? You might be able to make some dinner money, you might be able to make some car payment money, maybe pay some insurance, maybe do some odds and ends like that, maybe kind of slow build that account up and take a vacation in 3-6 months if you're able to be profitable. But realistically, many traders fail because they're undercapitalized. So I would recommend, if you don't have access to more funds to load into your personal account, please go get funded. Okay, yes, you got to pay a little bit of a fee. Yes, you got to sign up. Yes, you got to go through an evaluation process or some type of combine, some type of please prove to the company that's going to lend you this money and actually write you the check that you can trade. Like you're going to have to show that you can do this. No one's just going to hand you money to trade, right? But if you can, and you can learn a process, and you can learn psychology, and you can learn how to identify these setups, you can be profitable. You can take some payouts. You can actually use these prop firms to your benefit, right? You can set up multiple prop firms. You can have multiple accounts. You can take $1,000 payout here, $2,000 payout here, a $500 payout here. That's going to add up very, very quickly. It's all about the small gains, compound those small gains. You start pulling out $2,000, $3,000, $4,000 a month from some of these prop firms. Now you're able to fund yourself and fund your business, because at the end of the day, you are your own boss. You are a business when you are trading and being a day trader. Again, a little bit of a tangent there, but again, check all of the links down in the description box below. Again, my name is D'Anthony with evolutiontraders.com. I'll see you guys on the next video.